question 2.1, which is which is our statement of comprehensive income. Now they want us to complete the following notes. They want the trade and other receivables, retained income, and trade and other payables. Now let's start with our trade and other receivables. So with trade and other receivables, you need to calculate your net trade debtors first. And how do you get those? It's your debtors control minus your provision for your bad debts. So in the information, okay, last time we worked on debtors control, we were given in the trial balance before our adjustment the number of 578,000, and then we had an adjustment that affected our debtors control. Let me just check. No. So this was the amount that affected our debtor control. It says a debtor owed 9,600 was declared insolvent, meaning they're broke, they can't pay us, and then we were told how much they are able to. Okay, sorry, I got cut off there for a second. I was saying that we were told how much they were able to pay. It's 45 cents in the rand, and then the rest was declared as a bad debt, meaning all of that 9,600 is no longer part of our debtors control because some of it is being paid, and then some of it is being some of it is being written off as bad. So that's why we had to subtract 9,600 from our debtors control. So we need to show that here as well. 578,000 minus 9,600. And that was our only adjustment to our debtors control. So we say 578,000 minus 9,600 and 578,000 minus 9,600, and that gives us 568,400. Now let's get to our provision for bad debts. We were told to adjust provision for bad debts to 4% of debtors, meaning it's 4% of this amount. So that means that will be 568,400 times 4%, and that will give us our provision for bad debts. 568,400 times 4%, and that will give us an amount of 22,736. And now we can calculate what our net traders are by taking the 568,400 minus our provision for bad debts, which gives us 545,664. Okay. Then the next step, they ask us for accrued income. Now, what is accrued income? This is income we are yet to receive, meaning it's owed to us. So maybe we have sold goods, or maybe we have, maybe we have sold goods, or maybe we're waiting on someone to pay their rent. So let's look at that. We have here that's prepaid service, accrued income. And let's just look through our adjustments. There was a prepaid expense, accrued expense, donation. Okay, if we go to number 7, they say the rent for February is still owed by the tenant, meaning the tenant still owes us that money. So that money, we had calculated that rent income to be 8,400. So that's how much they still owe us. So that's our accrued income. The tenant hadn't paid us for that month. Then we continue to prepaid expenses. Now for prepaid expense, this is when we pay something in advance, or we pay for something but we haven't received it yet. And in that case, if you look at 5.2, they said 2,250 worth of consumable stores were ordered and recorded. However, it has not yet been delivered as the supplier is still waiting for certain items. Meaning we have paid for the consumable stores, but we have not received them. So we have prepaid for them. So 2,250 prepaid expense. Yeah. And that's your trade and other receivables note. Nothing else to add there. Then we go to our retained income note. So let's start with the format. We have our balance at the beginning, then net profit dash tax. It's always your net profit after tax, not before tax, after taxation. Then the repurchase of shares, ordinary share dividends. There are two types of ordinary share dividends: paid and declared, or interim and final. So paid, and then we have declared. Okay, so that's our format for, that's the format for our, what's this? That's the format for our retained income note. Now let's get into the information given. In your previous question, when you were doing the SCI, you would have been given net profit after tax as 1,402,800. You take it as it is and you transfer it to that note. 1,402,800. Then we look at the repurchase of shares. So we hadn't dealt with the share information because that has nothing to do with your statement of comprehensive income. So let's read what they're saying. The company issued an additional million ordinary shares at at 8 Rand 96 each. Okay, so it's 8 Rand 96 each. That was an issue. And then on 30th of September, they declared and paid an interim dividend totaling 928,000. And then they say on the 1st of February 2023, the company bought back 250,000 ordinary shares at 9 Rand 95 each. It was negotiated that these shares would qualify for the final dividend. Now, we are not looking at the dividend, we're looking at the repurchase of shares and the amount we record in the retained income. Now, the amount you always record there is this. The 9.95, that's our purchase price, the amount the company is paying to buy back these shares. And then we calculate something when we're doing the ordinary share capital note called the average share price. And then purchase price minus the average price, that gives you the amount you record in your retained income. So we need to calculate that amount. Let's do that. We need the average to calculate that amount. So how to get the average? Average is the total value of shares in issue before your repurchase divided by the number of shares. So as you can see, we started off at the beginning of the year with ordinary share capital of 37,440,000, and that was equal to 4,800,000 shares. And then what happened before the buyback? We issued an additional number of shares. And how much was that for? 1 million shares at 8.96. So the value will be the 1 million times 8.96. And then at the bottom, you write the number of shares, which is 1 million. So this is your formula for calculating your average shares. You have 37,440,000 plus 1 million times 8.96, which is the number of shares that are in issue plus the value of the shares that are in issue, and then at the bottom, the number of shares that are in issue, which is 4.8 million plus 1 million. Okay, so let's continue. We input this into our calculator. Okay. We input this into our calculator. Let's see, 37,440,000 plus 1,000,000 times 8 rand 96 divided by 4,800,000 plus 1,000,000. Okay, I am getting the average price of 8 rand. So this is what we do. We get 8 rand per share. And so remember, we're looking for the amount we're going to be putting in our repurchase under retained income. That's the purchase price minus the average number. What's this? Minus the average share price. So that will be 9 rand 95 minus 8 rand, which will give us 1 rand 95. And we will use that for, what's this? We will use that to calculate the amount we put in our retained income. So that will be 1,95. And then how many shares did we repurchase? 250,000. Okay. Any questions there? Not hearing any questions, so I'll continue. So that amount will give us, what's this? 1,95 multiplied by 250,000, and that will give us 487,500, and it's negative. Questions? Okay, then I'll continue. Ordinary shares we have paid and declared. And then they told us that the interim dividend totally, what declared and paid, an interim dividend totaling 928,000. So we just put the 928,000. Then they said a final dividend of 18 cents per share was declared. And they said that the buyback shares qualify, meaning we have all the shares at the beginning of the year, which is 4.8 million, plus the million shares that were issued. And then we don't need to minus, which is equal to 5.8 million. We don't need to minus the shares that were, what's this? We don't need to minus the shares that were bought back. So that would be 5.8 million multiplied by the cents, which is 0.18, and that will give us our final dividend. And that will be 1,044,000. Okay, any questions? Okay, I'll assume no questions and continue. Will we? Then we add up our ordinary share dividends. That will be 1,044,000 plus 928,000, and that will give us 1,972,000. And that's your retained income note completed. Then we continue on to the next note, which is our trade creditors. Now for trade creditors, we're starting off with an amount of 714,000. So what has happened to our creditors? If we look at our creditors, we have, what's this? For our creditors, we have the EFT 8.3. They said an EFT payment to a creditor of 7,200 was recorded. It was to settle our account of 8,000. It was not processed by the bank as the account number was entered incorrectly by the business. Okay, so what has happened there? We thought we were paying someone we owe, our creditor, but it turns out we actually did not pay them. We're not able to pay them because we used the wrong account number. So now what we have to do in that case, if we pay the wrong people, we now need to then undo that payment, meaning we need to add it back to our creditors, because when we made that payment, it was as if we no longer owe that amount, but now we do owe that amount. So that means we need to add it back. So that will be plus the full amount, which is 8,000, because we're not getting the discount anymore, because we actually did not make that payment. I hope that makes sense. Any questions? Can everyone hear me? Because people have been quiet today. Lebogang, can you hear me? Thumbs up if you can hear me. Okay, great. That was our adjustment to trade creditors, and it was the only adjustment, so we get a total of 722,000. Next part is income received in advance. So for income received in advance, it was the first transaction. It says a customer prepaid the service fee of 2,800 for the service to his motors that will be carried out in March 2023. Meaning we'll be doing the work in March 2023, but this has already been paid for in the current year. So then it's a income received in advance. 2,800. Excuse me. Then we carry on accrued expenses. These are expenses that we still need to pay. We owe them. Water and electricity for February, 7,200 was never paid. That will be part of our accrued expenses. Then we continue. We have, what's this? Then we have the advertising. We were told that an advert of 32,000 was placed in the local newspaper in February, has not yet been paid. So we didn't pay 32,000. But this continues. The newspaper had purchased a parking garage door for 7,500. The sale has not been recorded, as it was agreed that Mkhize Motors Limited could deduct this amount from the amount owing from the advert. So what do they mean here? There's an advert that we placed, meaning we owe the newspaper company the 32,000. Then the newspaper company came and bought a parking garage door model from us for 7,500, and they did not pay for it. So what they said is, you owe us 32,000, we owe you 7,500. So minus the 7,500 from the 32,000 you owe us, and that pay us what the balance is. So that is the amount that is still owed, which is 32,000 minus 7,500. 32,000 minus 7.5, that gives us 24,500. So that's part of our accrued expenses. And that will give us an amount of 31,700. Okay, then we continue. Now we still have to put other things in our trade and other payables. Let's start here. When we were doing the ordinary share dividends, there are dividends there that have not been paid for yet, and we call those shareholders for dividends. Dividends that are still owed. And that amount was 1,044,000. Then we continue. If you look at adjustment number 7, there was a deposit that the tenant paid us. A deposit, that is not money for rent. We need to give back that money at the end of the rent term. So that means that is the deposit is something we owe because it does not belong to us. We are just saving it for the tenant. So rent, that was a deposit of 9,000. Then we continue at our other things that we should put there. If we go to adjustment number 11, they say a loan repayment of 24,000 is due on the 31st of May 2023. Now, we put our loan normally in our non-current liabilities because it is for more than 12 months. But they're saying this amount of the loan will be paid in the next, what's this? It will be paid on the 31st of May. Our year ends on the 28th of February. So what will that be? March, April, May, 3 months from now, we'll be paying that loan. So that is no longer 12 months, more than 12 months. That is within 12 months. So that makes it a short-term loan, or the current portion of the loan, making it a current liability. So that's why we are putting it here. Short-term loan, 24,000. Then we go to adjustment number 12. It says, after all adjustments, an amount of 14,900 was still owing to SARS for the company tax, meaning we owe SARS tax. That's a current liability. So SARS income tax will be part of our payables, 14,900. Okay. Is that all good, level? Any questions? You can type in the chat if you have a question, or you can unmute your mic. Thumbs up if you're good. Okay. So that's your trade and other payables note. I don't think there's anything missing there. Okay, now we move on to a new question, question 3, which is a cash flow statement. And they want us in the first question to calculate the following figures for note 1 and those relating to operating activities. So they've given us the following information relating to Lenola Leeds Limited. Lenola Leeds Limited is a South African listed company that produces, packages, and supplies major retail outlets with a variety of electric cable solutions. They have an authorized share capital of 5 million shares. Okay, so that's share related information. We'll come back to it. Earnings per share. We'll also come back to that. This is an extract of the statement of comprehensive income. And then you say income tax is 30%. And then they gave us an extract of the statement of financial position. And okay. And then they gave us this other information, the working capital. So they've given us current ratio, asset test ratio, and the movement on trade and other receivables. Then this is fixed assets, financial assets, interest on loan, and dividends. So they've given us this following information. And for the first part, they want us to calculate what our net profit after tax is. So they've told us, what is the information that they've told us? Let's see. Okay. So if we look at our, If we look at our statement of comprehensive income, there's nothing there we can use to calculate our net profit after tax. But if we go back to number two, information 2, they're telling us the earnings per share is calculated to be 7 Rand or 700 cents. Now, if you know your EPS calculation, to get your EPS, you take your net profit after tax, divide by the number of shares in issue. That's your EPS. So that means we need to know how many shares do we have in issue. And they're telling us that the total number of shares in issue on the 28th of February 2023 is 4.6 million. Meaning the EPS calculation, which is your, your net profit after tax, which is what we are looking for, divided by the number of shares in issue, which is 4.6 million, equals to your EPS of 7 Rand. So we just need to solve for net profit after tax. So what do? We take the 4.6 million to this side. We were dividing it this side, so that will be a times. So this will be net profit after tax equals to 7 times 4.6 million. 7 times 4.6 million, and that will give you 32,200. Sorry, 32,200,000 and 200,000, and that is your net profit after tax. So you would have used the EPS formula for this. Then in the next question, they want us to calculate our inventories. So again, if we look under current assets, they're only given us the opening balance for inventory, nothing else. And if you now look in information, additional information, they have given us our working capital and they've given us the ratios. Now, if you know your ratios, the current ratio is current assets to current liabilities, and your asset test ratio is your current assets minus your inventories, and that gives you to your current liabilities, and that's your asset test ratio. So those are your ratios, and we are calculating your inventory. Now, what you can do to calculate your inventory then is these ratios were calculated on the 28th of February 2023. Now, with your current test and your, what's this? The current asset test does not have inventory, but the current ratio has inventory. And your current assets are made up of your, okay, just give me a second. Okay, your current assets are made up of your inventories plus your trade and other receivables plus your cash and cash equivalents, right? Cash and cash equivalents. Those three yes, those three items. Now, they're saying that the asset test ratio is, what's this? Is your current account minus your inventories. So that means if in your current ratio, it's just your current assets to your current liabilities. And then in your asset test ratio, it's your current assets minus inventories to your current liabilities. Now, if you were to say your current ratio minus your asset test ratio, it would be current assets minus current assets plus your inventories to your current liabilities. And that would be current assets minus current assets is 0, and then you get your inventories. Sorry, this is supposed to be a minus. And then you get your positive inventories. So that's what we need to do here to get our inventories. So we will take 1.15 minus the 0.75 is to 1, and that will give us 1.15 minus 0.75, and that will give us 0.4 is to 1. So if we want to find our inventory is 0.4 is to 1 to our current liabilities. Now let's go find our current liabilities. Our current liabilities for the current year are 964,000, meaning to get our inventories, we just need to take the 0.4 times our current liabilities of 964,000. So 0.4 times 964, and that will give us our inventories of 385,600. Any questions? Okay. If no one's saying anything, I'll continue. Then we have our trade and other payables. So trade and other payables, what's this? Trade and other payables, you take there your creditors control, similar to what we were doing. So creditors control, and then you also have your income received in advance, and then you also have your accrued expense, which is 14,100, your interest on loan. And then what do you also have there? Your SARS income tax. And then you can also put in your SARS payee and your shareholders for dividends. So it's similar. So it always changes when it comes to what's this? Your trade and other payables always changes. Sometimes you have other things as part of it, as part of the note. Sometimes it's just your creditors control and your adjustment. So like I said, it changes. So you can calculate it either way. So we have here, what's this? Trade and other payables for number 3. Okay. Trade and other payables. Okay, so these are trade and other payables that you'll be using in your note 1. That's what they're asking in the question. So, okay. So we have here 964,000 and then, sorry, 450,700. 450. Okay, sorry, let's repeat that question. They want the trade and other payables amount that you'll be recording in your note 1 of operating activities, meaning in your cash flow. Okay, now I understand. So trade and other payables that you'll record there is your trade and other payables from last year minus trade and other payables in the current year. It's what you put in your, if you're doing the indirect method for your cash flow statement. Don't know if everyone understands that, but they want this amount, the one you put here, whether it's an increase or a decrease in payables. They want us to calculate what that amount will be. So what are the payables for the current year? What are the payables for last year? Okay, so if we look at last year we're starting off with 780,400, and then we have 16,000, which is our income received in advance, and then we have the 21,600, which is our SARS payee. Then we don't have SARS income tax in this case, so we will not be including it, but we do have an accrued expense, and shareholders for dividends is not part of it. Neither is your, what's this? Bank overdraft is not part of it because that's part of cash and cash equivalents. Wait. Sorry, just checking something. Okay, so this. Okay, but shareholders for dividends, not part of it. Okay. So we just take those amounts only, not all of them. So we have 780,400 plus 16,000 plus 21,600 plus 9,300 Just give me a second. There's something wrong here. Okay. 780,400 plus 16,000 plus 21,600 plus 9,300. Right. So we have, sorry about that again. We have these amounts that we are adding except for our, what's this, shareholders for dividends. So that would be 780,400 plus 16,000 plus 21,600 plus 9,300. which will give us 827,300. Then on the other side, which is 2023, we have 450,700 plus 17,000 plus 23,800 plus 14,100 plus 21,400. And that gives us a total of 527,000. So now comparing those two sides, it's this minus that. So that'll be 827. This is 2022. This is 2023. 827,300 minus 527,000. That gives us a total of 827,300 minus 527. That gives us a total of 300,300. And we put that there as our trade and other payables. Then we continue net profit before tax. So net profit before tax, that is before our income tax. We already calculated our net profit after tax as 32,300. So what we'll do there is take the 32,200,000, and then we're looking for net profit before taxation. That is 100% before we removed the 30. And we currently have 70%, which is net profit after tax. So that's how you get your net profit after tax. You take your net profit before tax. You take your net profit after tax times 100 divided by 70. What you have, you put it at the top. What you're looking for, you put at the bottom. Times 100 divided by 70, and that will give us 46 million. 46 million. Then we continue. Adjustments for depreciation and interest expense. So in your note 1, you add back these amounts. Depreciation has been given as 345,000, so you put that back. So interest expense has also been given as 63,400. You also add that back. So that will be 345,000 plus 63,400, which will give us a total of 408,400. And that will give you your operating profit. If you add that with the net profit before tax, it will give you your operating profit before changes in working capital. So that will be 4.6 million plus the 408,400. So that will give you 5,008,400. Then we get to our changes in working capital. Let's start with inventory. So we have already calculated our inventory as 385,600. So what happened to our inventory? It decreased. So if inventory decreased, that means we have sold it. Decrease. And a decrease is a cash inflow. So that will be 679,000 minus 385,600 to give us a total of 293,400. That's our inventory. Then we get to our, receivables. Trade and other receivables. We need to calculate those. Okay. So we have our cash and cash equivalents. We have our inventories. We're looking for trade and other receivables. Now, if you remember, we were given our current ratio, what it is. So current ratio 1.15 is to 1. So that means if we take our current liabilities and multiply that by 1.15, that will give us our current assets. So 1.15 times our current liabilities of 964,000. So 1.15 times 964,000. That gives us a total of 1,108,600. Okay, So those are our current assets. Now, current assets are made up of the following accounts. So if we minus the other accounts, we'll get our trade and other receivables. So that will be the 1,108,600 minus 103,000 minus 385,600, and that will give you 620,000, which is our trade and other receivables. Okay, any questions there? Yeah. Okay, then, so we have what our trade and other receivables is. So now that we have that, we can compare it to last year. So it has increased. We went from 598,800 to 620. So that gives us a difference of 21,200. Now, when it comes to receivables, your receivables, those are your debtors. When your debtors pay you, you get more money. But now, if they're not paying you, that means your sales, your credit sales have increased. Meaning, then we need to remove that amount from our net profit. So that's minus 21,200. Then our trade, what's this? Our payables. What happened to our payables? Our payables, the increase. This was 2022, and this was 2022, and this was 2023. Let me just count that again. 450. Oh, I forgot something. Remember our interest. We already removed our interest here, so we don't need to do this. Sorry about that. Okay, we don't need to include it. So let's just fix this. So 2023 is made up of 450,700 plus 17,000 plus 23,800, 450,700 plus 17,000 plus 23,800. And your SARS income tax is also not included because we are going to calculate taxation paid. And this is net profit before tax. So tax has not already been included. So 491,500. And then for 2024, we have 780,400 plus 16,000 plus our pay of 21,600. And that gives us a total amount of 818,000. So the difference between those two, we decreased our trade and payables. So that means that was a cash outflow because we have paid. And that amount was 818,000 minus 491,500, which gives us 326,500. And it's a negative because we made a payment. Okay. So now you have all your changes in working capital. So that will be 293,400 minus 21,200 minus 326,500, which gives us a negative 54,300. And that's your note 1 complete. Any questions? Or are you good? Okay, let's continue. We go over to 3.1.3. They want us to calculate the following amounts as they would appear in the operating activities section of the cash flow statement for the year ended 28th February 2023. Now, let's start with our interest on loan, which is currently an accrued expense, meaning we have not paid for it. At the beginning of the year, for our interest, we owed 9,300. And then they tell us that we incurred another expense of 63,400. So that's how much we owed in total last year plus this year. Then we made a payment. After that payment, we still owed 14,100. So let's minus the 14,100 because that was not part of a payment. So this is what we owed in total, and then we made a payment and we owed 14,100. So that means 9,300 plus 63,400 minus 14,100, and we paid 58,600. Then we go to dividends paid. Dividends paid, same thing. At the beginning of the year, we owed a total of 420,000. Right. Obviously, when they start paying dividends, they are going to pay that one first. Now, let's see the rest of our information. They're telling us interim dividends of 8 cents per share were declared and paid on the 31st of August 2022, and then a final dividend was declared at the end of the year. Hey, let's see here. And they're telling us this is how many shares were in issue and dividends. Sorry. Okay. Dividends. Dividends. Okay, I'm just checking. Okay, so we owed 420,000. They're saying we declared 8 cents per share on the 31st of August 2022 and we paid it. And what else are they telling us? The authorized share of 5 million shares were sold on the 1st of March 2022 to bring the total number of shares in issue on the 28th of February 2023 to 4.6 million. No shares were repurchased during the year, meaning we only had changes at the beginning of the year. After that, there were no more changes, meaning throughout the year we had 4.6 million shares. So our interim dividend then would be 4.6 million multiplied by 8 cents. And our final dividend was declared at the end of the year. So final dividend, that's the dividend you owe at the end of the year, meaning it's also the number that is your shareholders for dividends. So you will still add that shareholders for that final dividend, which is 437,000, but you then minus it again because it was not paid. So minus 437,000. So if you want your dividends paid, it's basically your balance at the beginning plus your interim dividends. So that will be, 420,000 plus 4.6 million multiplied by 8 cents. And that will give you a total of 788,000. Then we go to tax paid. Tax paid, you start with your SARS income tax at the beginning of the year, which is 15,900, and it's a refund. It's under current assets, meaning SARS owes us, so we're not going to pay that amount again. So you say minus 15,900. Then we need to calculate what our income tax was for the year. So our net profit was 46 million. So we take 46 million, multiply that by 30%, and it will give us our income tax for the year. Then we are told at the end of the year, we still owe 21,400, meaning that amount was also not paid, so we minus 21,400. So that will be negative What's this? Negative 15,900 plus 46 million. 46 million. So 1, 2, 3, 4, 5, 6 times 30% minus 21,400, and that gives you a total of 137627. Let me check this again. Okay, 46. So that gives you a total of 13,762,700 as taxation paid. Any questions for the cash flow statement? Everything good? Okay. So then 3.2, they want us to complete the investing activities section. So investing activities, this is what you use with your money that you funded. What did you invest in? So it's basically your financial investments and your assets that you invest in, the fixed assets. So let's start with our fixed assets. They're telling us that during the year, the company purchased new equipment. So that will be part of investing activities. And then they sold old equipment at its book value of 373,000. So let's just write down that sale. So proceeds from sale of fixed assets. You write that as it is 373,000. Then we know there has been a purchase of fixed assets or of equipment, but we don't know how much it is. Okay, so that's what we need to calculate. Okay, now what have they given you the information? They haven't given us information regarding equipment, but let's see what they've given us. They've given us fixed assets at carrying value at the beginning and at the end of the year. They've given us depreciation, and they've given us a disposal at carrying value. So that should trigger you something in you when you hear those things. Carrying value at the beginning and at the end, a depreciation, a disposal, and you're looking for an addition. So what is that? Note 3. So how does note 3 work? You start with your carrying value at the beginning, then you have your movements. And what makes up your movements? Additions, disposals, and depreciation. Then what do you get? Your carrying value at the end. So that is what should have been triggered. So let's write this down. Carrying value at the beginning is 2,652,000. Carrying value at the end is 2,937,000. Then your depreciation is 345,000, and we had a disposal, and that was 373,000. Disposal at carrying value. So we write down the carrying value of the disposal. So we have all this information and we are looking for additions. So we can work backwards. We take our carrying value at the end, which is 2,937,000. We add back our depreciation of 345,000. We also add back our disposal at carrying value. Then we subtract our opening balance for carrying value of 2,652,000, and that will give us additions of 1,008,000. That's how you get that amount. All good? Okay. And then the other thing, I said it's all your investments. And if you look at 5.3, they talk about financial assets. They're saying during the year, company sold some of its shares it had in Tata Limited as the company was not paying any dividends. Meaning we were invested in the company was invested in another company, and now we have sold some of that. If you see here, the investment went from 480 to 250. So those are the shares we sold. So that'll be 408. Sorry. Sale of shares. That will be 480,000 minus the 250,000, which will give us, sorry, this is supposed to be negative, which will give us 230,000. And that's money coming in. So you take your 1,008,000 plus your 373,000 plus your 230,000. So the 1 million is negative, and you'll get negative 405,000. Okay, so those are your investing activities. Then the final part is to calculate the net change in cash and cash equivalents for the year ended 28th February. Indicate if it is an inflow or outflow of cash. So there are two ways to calculate the net change. Either you use the net inflows from your three activities, which is investing, operating, and financing. We didn't have financing, and we have enough information for operating, but we don't need to do that. The second method now is to use the opening balance of your cash and cash equivalents and your closing balance for that, and we have that information here. So cash and cash equivalents, we have them here, 108,000 and 4,300. Now there's another account, the bank overdraft. That is also part of your cash and cash equivalents. It's just a negative part of it. So in 2022, we have that as well. So that means our opening balance will be equal to 4,300 minus 39,700. 39,700, which gives us 39,700 minus 4,300, which gives us a total of 35,400 negative. Then your closing balance is just the 103,000. So what you do to get your net change, you take your closing minus your opening. So that means that will be 103,000 minus negative 35,400, which will give you positive 138,400, meaning there has been an inflow. That's your net change in cash and cash equivalents. Okay, all good? Any questions? Okay, all good. And that is our question done. So that's it for today's lesson. If you have any questions, you can send me in the group or you can send them to me personally. Thank you for joining.